Good afternoon, everyone. This is Scott Thompson, and we are here for another Stock Investing for Beginners webcast. I want to give a shout out to Barb, who is in the chat. If you have some questions, Barb will help out there. Give also a shout out to Eva and Britta and Lawrence and Simone and Rojo and everybody else that's joined me today. I appreciate you taking some time out of your busy schedule to join me. In the surveys over the last few months that we've done this, and some of the chat questions have come in, of people been asking about a new investing plan, a new investing system. And so we're going to do that today. I want to walk you through the process. The main goal is to help you, create your own trading rules, but we're going to use a crossover system with the objective of trying to catch stocks when they're just starting a new trend is the objective for this plan. So we'll jump right in with that. I'll go through the process. I may not get to many of the chat questions today, but I will look through all of them. And if there's some questions that haven't been answered or need some additional answers, I'll put those in the YouTube comments when we're done. But before we get started, let me go ahead and remind everybody that our presentation today is for informational purposes only. And the investing plan that we do today is not a recommendation. The stocks we look at today are not going to be recommendations of any particular strategy or stock investment. We will be using the Paper Money platform and a demo account. Those are different than the live trading. There are some significant differences there, so be aware of that. We'll be talking about stop losses as normal. There's no guarantee that an execution of a stop order will be at or near the stop price. And as always, remember, all investing involves risk, including the loss of principal. Just by way of review, a few months ago, we finished going through our 8-lesson series. This is that 8-lesson series. Over the last several weeks, we've been just adding, kind of bonus sessions talking about managing the portfolio, position sizing, when to sell. Today, we're probably going to revisit this idea of planning your trade and trading your plan, of talking about creating a new investing plan. So that's our objective today. Let me jump in very first into our Thinkorswim platform and pose a question to you. All right. So does everybody see the chart here? This chart's a little bit different than the chart that we've been looking at over the last several months. This particular chart has a 20-period exponential moving average and a 50-period simple moving average. Now, I did post, there's a script if you want to upload this chart. There's a script there in the chat. If you scroll up to the top, you should see a little post that I made before we started the webcast today that says chart and just has a 20 EMA and 50 SMA in there. Those are the only indicators we're going to be using for this. Now, I would like some participation here as I asked some questions, but we can see Johnson & Johnson here. I'm looking at a zoomed in portion of the 1-year chart. You can see we're back in basically April and May of 2025. The dates are down here at the bottom. And my question to you would be is when do you want to buy this stock? We can see that the stock had been trading up here at around $165 to $170. The stock had dropped below the 50-period moving average and started to trend down a little bit. Then this 20-period exponential moving average, which is just a fairly short-term moving average, pretty sensitive to price motion, started to trade sideways. Then it went down a little bit here going into May, and it started to rise again. So my question again here is, when would you want to buy this? When would you feel comfortable buying this? And this is the question that comes up, anytime we're looking at a stock. I mean, most of us, obviously, if we can see on the chart that it said low at 141.50, I think all of us would agree that if we could have bought that at 141.50, we'd have been pretty happy with that. If we look up here at the top left, you can see the stock is currently trading at $245. So you probably are pretty good getting this thing anywhere in here, right? 145, 150, 160, who cares if it's at 245 now? It doesn't matter too much, right? But the problem is when we're talking about creating a system, we need to start off with what we're trying to do, okay? So I'm going to work with you guys on this together, and we're going to create, the name of this is just 20 EMA, 50 SMA crossover investing plan. Okay, and this is, again, not a recommendation. It's just a sample plan. Now, the very first thing, anytime you're creating a rule set, is you want to try to identify what's your objective. Are you trying to trade short term? Are you trying to invest in something? Are you trying to, you know, generate income with dividends? What's the objective that you're doing? And our objective, the overriding objective with the crossover type of system, is to try to catch trends as they begin. So I'm just going to write down buy stocks that are potentially starting a new uptrend. Okay, that's more or less the objective, all right, is to start that trend. Now, we'll probably add to this as we go through, but that's part one of any plan, is identifying your objective. Now, the next part is, well, what are we going to buy? When we're creating a trading plan or an investing plan, we want to identify the types of stocks that we're going to buy. Now, our webcast here is Stock Investing for Beginners. So we're staying really high level here, very simple guidelines. And I know many of you, Eva, Britta, Lawrence, many of you, Sharon, hello, Kevin, many of you guys have been around for quite a while, have done investing for a long time. So you may add criteria here to your what to buy. Maybe there's some fundamental data that we covered in lesson 5. Maybe there's some, some volume criteria, things like that. But what we're going to do is just keep this really simple. We're going to buy stocks that are $20 or more, buy stocks with 250K volume. And that's just average daily volume. Those are the types of stocks we're going to buy. Now, the reason I have this in here is just to make our scanning criteria a little bit easier, to eliminate some of the stocks. But again, you could put any criteria that you want in here for your what to buy, maybe a PE ratio, maybe earnings per share growth rates, dividends, that sort of thing. All right. After we identify what we're going to buy, we need to identify when. When are we going to buy this? And we'll go back and look at the chart in a second here. When do we want to buy this stock? Well, again, if we look at our objective, buy the stocks when they're potentially starting a new uptrend. Well, you guys help me out. You guys know the answer to this. What is the definition of an uptrend? Okay, I'm going to highlight this bold here for a second just so you guys can take some time to answer that question. But when to buy? Okay. So help me out. What's the definition of an uptrend? Yeah, higher highs and higher lows. The price is making higher highs and higher lows. And we'll go look at that on Johnson & Johnson here when we go back. And I'm going to identify our buy signal. Now, this plan is called 2050 EMA crossover. So when to buy, the first entry, the entry signal we're trying to catch is buy on the close when the 20 EMA crosses above the 50 SMA. Does that make sense? Eva says buy when the trend goes up. Okay, so we're going to add now. Let's go back and look at our Johnson & Johnson example here. And, again, we can see the stock was trending down from March of 2025 to making that extreme low there on the 9th of April, went up and made what I would still consider a little bit lower high, came over here. This is when it's starting to change, okay? If downtrends are lower lows and lower highs, then when the stock fails to make a lower low, that trend is starting to change. And right here, somewhere over here on the 28th or 29th of April, the stock bounced off of what I would call a little short-term support area right here, about 152. And if we look at this low compared to the previous low, we could certainly argue that that's a little bit higher low, okay? And what I like to do in these scenarios is just like draw little circles, that indicate where some of these lows and highs are, okay? So we're starting to see the trend change. Now, again, I see some higher highs and higher lows in there for defining an uptrend. If my last high is over here at about 158 to 159, all through this period, you guys see that? The trend really isn't up, it's sideways, right? We're making similar highs, kind of similar lows, and then we come down in here and actually make another lower low. Do you guys see this? This one down here on the 14th of May, obviously a little bit lower low than we've seen. And so now we might be thinking, wow, I don't know if this is going to trend down or not. It's below the 50-period moving average in green. It's below the 20-period exponential moving average here in red. And, I don't really know. So again, our buy signal, if we go back and visit our rules that we're creating, we're going to buy on the close when the 20 EMA crosses above the 50. Now, let's think through this a little bit. What's going to happen first? If the stock is below the 20 and below the 50, in order to get the 20 to cross above the 50, what's going to happen? Let's think through this just a little bit as we go through this example. And the reason I'm asking these questions is one of the most frustrating things for me when I first started was I always felt like I was late to the dance. I always felt like, dang it, I should have bought that last week or last month. And the reason that I felt that way is because the stock had gone up a lot since, what I consider a buy signal. So I think one of the great things, take this away, put this in your notes somewhere, but one of the great takeaways from our webcast today is going to be get ready to buy the stock before the signal happens. Okay, you want to start getting ready. We got the Olympics going on, I think still, those runners are out there on the track. They're mentally going through, they're getting ready to run that race. And we want to do something very similar when we're investing, is get ready before the signal happens. Because if we're always looking for the signal itself, then it's going to feel like the gun goes off and, everybody else started, now I got to start. Okay. So here's the deal. We have our entry signal identified, but my question to you is what's going to happen first? Well, the price is going to go above the 20. Then the price is going to go above the 50, and it's got to stay that way for a little while to pull that 20-period moving average above the 50. So what I want to do is just go forward a few days and ask a simple question. When you see your stocks that are either below the 20-period moving average or below the 50-period moving average, and you start to see this trend shifting from down to sideways, that should get you a little bit excited. It's like, hey, there might be an opportunity coming up here on this particular stock. And so I'm going to watch this over the next few days. Okay, next day, we go forward a little bit here, and we can see the stock actually went up here. We're on the 30th of May, 2025, and it looks like we closed right near that 50-period moving average. Now, the next day, we close a little bit higher. We're down, bouncing around. And what do you see happening here? The 50-period moving average is getting closer and closer to the 20-period moving average. And we're starting to see some price action that, again, is very sideways. Now, my question to you, let me zoom in here just a little bit. My question to you, is this a buy signal based on our rules yet? Okay. Let me change this to my cursor so it's a little easier to see. But is that day a buy signal based on our rules? No. What we're looking for is the red line to cross above the green line. So it's not a buy signal there. We move the stock forward. Okay, there's the close, some closes above the 50. That's going to happen first. Now, sometimes it'll be simultaneous, but that's going to happen first. And then the stock right there. Do you guys see that? A little hard to see, but if you zoom in, and I can't zoom in really any tighter than that because I'll lose what I want to keep here on the chart. But right there, do you guys see where that red line is now above the green line? Just chat in a yes if you see that. Now, if you didn't see it, here's an easy way. Okay, up here at the top, I have a simple moving average and a moving average exponential in green and red. And if I put my cursor on that day, you can actually see the moving average that particular day was at 154.13. That's the red number, is 1 penny above 154.12. You guys see that? So technically it's above. So technically there's our buy signal. And what did we say we were going to do? We're going to buy this at the close so we can confirm basically that's going in. But here, the closing price was 156.45. Now our market's closed right now. If I came home from work, and this is very common when you first start investing, you're busy, you're working full time. So you come home from work, the market's closed. You go through your stocks, you do your daily routine, and you find, oh, here's a buy signal on Johnson & Johnson, and I'm going to put a limit order at 156.45. Okay. and that would fill the next day. Now, just for fun, I'm going to go ahead and draw oval on this day. So we have it right there. But the idea is we put a limit order to buy there. Okay, now let's go back to our plan. So we've got the when to buy. Now, what's the next question? When we're creating an investing plan, we want to know what to buy, when to buy, how much to buy, and when to sell. So how much to buy is next. How much to buy. And you know, this is stock investing for beginners, so there's a lot of different ways you can do this. You know, in our previous plan, we were investing up to $500 in a position. In this one, I'm going to do something similar, but we're going to invest up to $1,000. Okay, buy up to $1,000. And that might be like, you know, some people will do up to 5% or 10% of their portfolio value. If you had $10,000, this would be 10%. If you had 20,000, that would be what, 5%? And so, you know, position sizing for this is just going to be really easy. We're going to take whatever the price of the stock is, divide it into 1,000. That's how many shares we can buy. Okay, pretty easy. All right. Now, what's the next question? We've got what to buy, when to buy, how much to buy, when to sell. When to sell. So now this is challenging. Let me give you some other ideas. Those of you that have done any, you know, investing plan creation in the past, if you've done some crossover plans, one of the things, now write this down in your notes somewhere again, one of the things that you'll have to prepare for in a moving average crossover system is a common exit is when the 20 crosses back below the 50. Okay, that's a very common exit. One of the problems or challenges with the crossover, a pure crossover system, is that when the trend starts to go back up, you can see the stock go back and forth, up and down, and those moving averages when the stock is trading sideways may crisscross each other multiple times before that trend takes off. So what a lot of people will do when they do a moving average crossover to avoid that, what they call a whipsaw, where you get in and then you get a signal to get out. When you get in, you get a signal to get out. So what I like to do and what other traders like to do when you're doing a crossover like this, the initial stop, okay, initial stop would be below support somewhere. So what you have to do is identify where the recent support, okay, and we're going to use 3% below recent support. That's just going to be our rule or our initial stop. Okay. So let's look at this on the chart. Since we have a buy signal on Johnson & Johnson in our example. And then Jonathan's asking about buying the max versus like buying you know, like scaling in. Sure, you know, that's a rule. Like you could add that to how much to buy. You could say, well, I'm going to allocate $1,000 to this, but I'm going to go in on the first signal with half of that or a third. And then you'd have to identify those new buy signals, which we'll talk about in a second. Okay, you guys help me out here. Here we are. We have a buy signal. Let's go to the next day. So, you know, the next day our order actually would have filled a little bit lower because it opened up there the next day at 156.30. We're in the trade here. Let me go ahead and I'm going to move this over. So that's the entry signal day because our order filled. We came home from work. The market was closed. We put a limit order in there and it put it in there. And where would you say recent support was on this day? Let's call it the 11th of June, 2025. Now, some traders would look at this and say, well, I can see some support. Let's go ahead and draw a line. I can see some support here at about, call it 152. And certainly down in here was our extreme low, down about what, 146. Now, you'll have to decide, you know, which one of these support levels you want to go with. If you're dealing with a really volatile stock, I might suggest using the farther away support. And like Jonathan is saying, you know, maybe you scale in here, make sure the trend is going to change, and you put a stop, you know, maybe a little bit farther away. And then when that trend starts to resume, you can start moving your stop up like we've done in our other trading plan that we had. Okay. But for this example, let's go ahead and use this level. This is we'll call it 151.40, okay? So 151.40, I'm just gonna take a hand calculator here. 151.40 times 0.97. So 146.85 would be our stop, which is kind of down here. I'm just gonna write a little note just so we have it here together. So stop 146.85. All right, any questions about this so far? All right, crossover is the entry signal. We're investing about $1,000 in the trade. We're gonna set a stop 3% below a recent support level. That's gonna be very subjective on your end. And now we're ready to go, okay? I have a lot of, and then Disorderly's asking how far back. We're just talking recent, so probably no more than about 4 weeks, but 2 to 4 weeks there just to find some of those recent lows is what we're looking for. All right, so now we have our plan. We've got when to sell, initial stop 3% below support, and basically that's it. We're done. Except what? Well, what happens sometimes? Let's take a look at what if later on, okay, the trend's developing and the stock starts to go down below that 50 period moving average. Well, we introduced a rule to do the stop on the change with the 50-day or the 50 period simple moving average. We've been trading that for months, right? So if you like that rule, you could use that. I'm just going to put that in here, change stop or stop adjustment rule. And these are just, again, the real overlying purpose here is to help you create your own trading plan. So I'm hopefully asking questions that you should be asking yourself as you develop your own plans. Okay, close below 50 SMA, put stop 3% below the low price on that day. And that's the same rule we've been using there for that rule. So now let's go back, and I know we spent a lot of time on Johnson & Johnson, and I want to get to some scans and look for some new stuff here. But I just want to go through. Now, I cherry-picked Johnson & Johnson on purpose. This is one that we traded in our old investing plan, and it's a great example of what we're trying to do. Now, this obviously doesn't always happen, but you guys let me know if we're looking for the stock to close below that green moving average, and that's when we're going to move our stop up. When would we do that? Okay, now we bought this. I'm going to say this is on the 11th, so 6/11 entry. And that'll move over with us. Okay, so the stock right there chopped around. Oh, wow. The stock closed below the 50 right there. So what would we do here? Well, the initial stop we set at 146.85. So my first question is did we get stopped out when this thing closed below the 50? Well, the low price that day was 152.10. Our stop, actually, let me go ahead and move this down to where it kind of is. It's more over here. So, we're not anywhere near there. But, this is didn't stop us out. Now, here's another little guideline. I've played with and practiced with these moving average crossover systems a number of times over the years. And one of the things that I find really frustrating is, what's the objective again? We're trying to catch a trend change. I don't know if this is going to change the trend on this entry signal. No idea. I've position sized, I have a stop, and ultimately, with buying 8 or 9 shares of this stock here, maybe 7 shares, if I got stopped out at 146.85, I should be very comfortable with that loss. Okay. If you're not comfortable with that loss, then you need to revisit how much you're investing in the trade. Okay. Don't tighten the stop up so your risk is less per share, because that's a big mistake that most new investors make, is they tighten their stop up because they don't want to lose as much money. They get wiggled out of it before the things even changed. And then, a month later, 2 months later, they're not in it and the stock's up $40 or $10 or whatever. Okay. So here's another takeaway. All right. In this crossover system, what I like to do and what some traders will like to do is when they set that initial stop, is they'll just let that stop do its work or its job until the stock starts actually trending up. So our rule that we just wrote, if it closes below the 50 period moving average, the rule says to put the stop 3% below this low price that day, which was 152.10. Okay, if we'd moved our stop, I'll go ahead and calculate it just so you know how to do it. But 152.10 times 0.97 would be a stop at 147.53. So I'll go ahead and put that in here just as kind of a way to do it. 147.53. That's what the rule that we just wrote says to do. But again, for a lot of traders, a lot of new investors, when they first start with this crossover entry, they like to give some wiggle room and just let that initial stop do its job until the stock starts trending. So let's move forward again. Okay. Now this came all the way down to 149.04. We were in the trade there. The stock was bouncing around, and right there, the moving average crosses again. Okay, now this is kind of that whipsaw that I talked about. You know, I don't know if this is going to resume a downtrend. My initial stop is still right here at 146.85. Our stop adjustment rule would have been 147.53. Again, most traders, when they first start this crossover, do not want to adjust the stop until the trend starts. So let's go forward some more. Oh, and you may have noticed we did not have an exit. If the 20 crosses below, or the 50, that's not an exit in the rules that we created. Now it could be, but we didn't use that rule, okay? So we're still in the position here. The stock breaks back above the 50. We're going forward. We can see some old resistance here. Let's go ahead and draw that line in just for fun. You know, we have some old resistance in this area, about 157. There's a new crossover right there. Do you guys see that? If we didn't buy the stock on this first crossover, or like Jonathan said, maybe we went in with partial position here, we may have added to the position over here when we got the crossover. This particular day, you can see, again, look at these numbers right up here at the top. Okay, this particular day, the red line was at 153.78, and the green line was at 153.80. So that's not the crossover day. We didn't see the crossover until the next day. And so this day on the 7th of July could have been another buy signal, but we already bought it over here, and we're still in the trade. It's kind of that whipsaw that we're aware of. Okay, we're going forward. Okay, this one, now as we go through this, I'm going to speed up and then we'll do some scanning and look for some new buy signals for today. Okay. But right there, what do we call this? If I had drawn resistance there at about 157, that right there is called a breakout entry signal. What often is happening right there, that's when your MACD is going green. You know, it had been maybe rising for a few days, but that's probably a green arrow on the MACD or an existing green arrow, but that's called a breakout entry. Now, would we move our stop here? Again, not based on our rules. You know, the stock really hasn't started trending yet. Let's go forward some time. Okay, got earnings. Now, question always comes up. Do we hold this over earnings? Okay, answer, yes. This is an investing plan. We're not going to be selling the stock every 3 months because of earnings. Okay. Now, in some of our other webcasts that you attend, you can learn about protection and things like that. But for this plan, we're just buying and holding until when? Until the trend's over. Okay. Go forward. Now, somewhere in here, I think we could argue the trend is starting to change and we're going up. So now, if it closes back below the 50, that would be a time to adjust that stop order. Okay. So I'm going to go forward just pretty quickly here, and I'm going to zoom out because I want to run a scan with you and buy some new stocks. Okay. This is where we are today. The objective of the plan is to try to catch exactly what happened with Johnson & Johnson. Now, when we did this entry on the 11th of June, nobody knew for sure that Johnson & Johnson was going to trend up. All right. Now, I want to add one last little thing here to our trading rule set is this question often comes up. Well, Scott, what if I missed this initial crossover? I mean, this hasn't had a 20 period dipping below the 50 period since July of 2025. Is there another opportunity to buy this stock? And so what I want to do is add a rule. And the rule is going to have basically kind of two things. It'll be if it closes below the 20 period moving average, like it did right there on the 10th, and goes back above, that would be a new entry signal. Okay, so let's add that to our rule set, and then we'll be complete here. So when to buy, 20 crosses over. So after crossover, buy when the stock closes back above the 20 EMA or bounces off 20 EMA. Okay, so that'll allow us to get into a position in the future if that trend is already in process or moving along, like Johnson & Johnson was. Okay, so that's there. Now, if we get in on a new crossover, where do we set our initial stop? Well, I'm going to put that over here. So after crossover, stop, we'll go 1% below the 50 SMA, just like we're doing in our current, 2 green arrow plan. Okay, so if we go back over now to Johnson & Johnson, let's just take a look over here. This is probably the clearest one. So here on the right side of the chart, you can see that we closed on the 10th. We closed below the moving average. The moving average value is just right up there. Moving average is at 176.12. We closed the C value over here. The C value is 175.79. So we can see that's closing below the moving average. We're still above the 50. So if we're not in this stock, we're looking for it to close back above the 20. And that happened the next day. There's our new buy signal right there. And on that day, let me draw a little oval here just again for an example. This would be our buy signal day. And on that day, we would set our stop 1% below the 50 period moving average as just a way to, get us out if the stock trend changes right after we bought it. Okay. Now I see there's a lot of questions in here. Like I said at the beginning, I probably won't be able to get to all of those, but the general questions I hope I've answered as we've gone through the objective of this position, what to buy, when to buy, how much to buy, and when to sell. And for Johnson & Johnson, we'd actually still be in this trade. Anytime we bought this, it just hasn't given an exit signal yet. All right. Okay. Now let's go to the fun part. So let's go run a scan. And again, I've created this scan already in the, in the chat. So if you scroll back up to the top on the chat, you'll be able to see that there's a scan. One of them's called, okay, crossing above, or 20 EMA crosses above the 50 EMA. Okay, here's the symbol there. And again, I'll show you how to load this. But because this is using some studies, this only will work in your live version, not the paper money version of Thinkorswim. You have to go run this script or this scan in your live account, and then you can get some examples. But so I have a live account, demo account open here. It's in black partly so I can tell that this is the live one versus the regular one. All right. But once you have that, if you go up here to set up open shared item and you just copy that link in there, I named it 20 EMA crosses above the 50 EMA. So again, the purpose here is to, find something that might be starting a new trend today is the idea. All right. So you'd click import. And then when you do that, if you go over to the scan tab and come over here to load scan query, and then click on personal, it should be there. Okay. So 20 crosses above the 50 EMA. That's the one that we just loaded in there. And here's the parameters. Again, really simple. You know, we put in $20 minimum price, 250,000 shares of volume. And then this one's just saying 20 period exponential moving average crosses above the 50 period or simple moving average. And it's looking for something that's happened today. Okay, that's today. So I'm going to run this in all stocks. Now, the last few weeks we've been going and identifying which sector's been outperforming. You can do that here, but remember what we're doing. You know, the sectors that are outperforming have probably been trending up for 2, 3, 4, 5 weeks, 7 weeks, 8 weeks, 2, 3 months, right? So this scan, we're really not looking for the strong sectors. We're looking for maybe something that's been beaten up over the last few months or weeks, something that was kind of like Johnson & Johnson was, that may be trending down or sideways. And so we're just looking for that new opportunity, for that new crossover. And that's the start, hopefully, of a new trend. So we click scan, we run this, and in this case, I've got 13 results. Now, I ran this scan earlier, and I picked a few of these to look at. Now, you guys are welcome to look at all of these stocks. You can, you know, go back and take a look at them. I picked a few of them. We'll probably have time to do 1, maybe 2 example trades today. But one of the things I wanted to look at very first was this ALC. I thought this one was interesting. So let's go back over to our demo account, or our paper money, and ALC. What's going on here? So ALC, you can see, was at $99, traded all the way down to 71. This actually gave the crossover entry right there. Do you guys see that? The very first opportunity for the crossover entry was right there about the 17th of November, and it really hasn't trended too much. Today, and I think it's got it today. Let me shrink this down here. Okay, so actually, yes. So this one barely is crossing above today. You guys see that? Let me zoom in right here. I'll have to put my cursor on that, but you can see a couple things going on. Number one, it looks like the stock's trying to break resistance here, certainly diagonal resistance. The 20 period red exponential moving average is at 79.85, and the green line is at 79.83. Those numbers are just right up here. So we do have that crossover here. And so let's buy this stock. Okay, so what do we do? Well, I need to know where my stop's going to be. So the stop rule said to find recent support. Jonathan, and I think somebody else asked, how far back do we go? Couple weeks. We can find a low, right? So I would say we have some support in this neighborhood. Just probably drop right there about, 77, call it 77. All right. Now our stop, we're going to put that 3% below 77 here. This is our first entry. We don't know if this trend is going to start going up strongly or keep going sideways. But 77 times 0.97 gives us a stop at 74.69. So pretty easy, just right here. Right click, buy custom with the stop. And how much are we going to invest? Well, how much to buy? We said we're going to put $1,000 in there. Quick math says I can probably do about what, 9, 10 shares, 11 shares? Probably 11 shares. I'm going to link that up. So we'll buy 11, sell 11. We said our stop was at 74.69. And we want that good till canceled. We'll hit confirm and send. And just double check our buying power. Our total investment's 904, so that's pretty close to 1,000. We could probably do another share. Let's do another share. Let's do 12 shares. And we're just underneath $1,000 there. And I created a new group, 20 EMA crossover. So we'll put an order in for tomorrow. The stop not guaranteed to fill there. That's just going to trigger our market order. Might be filled a lot lower than that. We send that order off. So that's a working order for tomorrow. All right. There was one other one I wanted to look at in that list, and we've got time to do that. So let's go back to our search page. The other one I wanted to look at was EHC. So Encompass Healthcare, or Health Corporation here. And let's take a look at the stock on the chart. So EHC, again, what's the objective of this plan? We're trying to catch trends as they start. We don't know if they're going to start and take off or start and fall apart. But again, that scan I gave you will find stuff that's crossing today. And so, you know, the crossovers here, recent supports down in this neighborhood. So we draw a little line down there. Let's call it 93.37. There's our crossover entry. $100 stock, probably buy about 9 shares of this. We need to calculate our stop, 3% below 93.37. Now, some of you are thinking, well, that sounds like a long way away, Scott. Well, again, this is kind of almost forcing what Jonathan said earlier, is to like scale in, right? You know, that initial stop on these crossover systems, one of the most frustrating things is getting knocked out of this when that thing's bouncing around as the trend is trying to change. So again, a lot of traders, investors like to put their stop pretty loose, which forces them to buy fewer shares oftentimes. Or you could go in with like $500 on this one here, and then as the trend develops, add to the position, okay? But let's take a look. 93.37 times 0.97 gives us a stop at 90.56. We're going to right click, buy custom with stop. Going to go in there with, call it 9 shares. Change our stop over here to 90.56. Good till canceled. Confirm and send. And we're going to buy 9 shares, 109.21 entry price. We're going to try to get out of there at 90.56. Again, that's a stop order, no guarantee to get filled there. We'll put it in our group. We send that order off, and that's a working order for tomorrow. All right. Now, let me go back to just our home page here, our monitor page. And, you know, we're just going to add this to what we're already doing. So we have now some new 20 EMA crossover, a new strategy here. We'll probably develop this one as we go. One of the things I do want to look at going forward in this particular plan is what we call intrinsic value of a stock. Do some deeper dive fundamental analysis onto the stocks that we consider buying here to see something is technically undervalued, which is again kind of the purpose of trying to catch these new trends after they've been beaten up a little bit. So we'll probably look at doing that. We'll probably look at adding some fundamental criteria to this particular one. And then we'll continue to do, you know, our 2 green arrow plan here. You can kind of see we don't have any stocks that are below the 50-period moving average. Cisco and Citigroup actually, you know, were below the moving average, but it looks like they went above today. They have ones there on our 50-period moving average. So really nothing to do on that one. And so hopefully this was helpful for you today. I know there's a lot of questions. I will copy those questions into the YouTube comments and answer those. But hopefully this was helpful for you today. I appreciate your time, and have a great day, everybody. Thank you.